everybody. Good morning. It's almost 8 o'clock in the morning here on August 6th, 2024. I'm wanting to do just a real quick update on the Japanese stock market and the U.S. markets basically over the weekend, just to try and explain a little bit about the reason why things may have dropped. Before I get into all this, as you all know, this is not financial advice, I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market here. If you need access to our Discord, you can find all of that information on BitDoctor.org. Feel free to send me a DM in Discord as well if you want to have access or have any questions about accessing our insured area on the BitDoctor Discord server. All right, what I want to do is just talk a little bit about what happened, why it happened, and could we have seen it coming? Sure, but the funny thing about economics and the stock market and dynamics and everything is a lot of times you can always explain why it happened after the fact. Very few people are able to actually see it happen as it's happening. And so I've got the Japanese yen here. I've marked out two dates, which is October 13th, 2022 and January 16th, 2023. These dates correlate to a bottom and a top on the Japanese yen. And those dates also loosely relate to, I'm going to go to the S&P 500. October 13th happened to also be like the very bottom of the market when we had our bearish market, if you will. We had a significant bottom that occurred here, and then we had a little bit of a pullback, started to see a recovery here on, this was January 18th. This general area here, we were starting to see a little bit of a recovery. And as it relates to the Japanese stock market, taking a look at this, again, we've got a bottom here on October 14th, and then we've got a bottom here on January 16th, roughly those same dates. So what did we see related to the Japanese yen versus the US dollar? Okay, so we saw a rise in the in the value of the Japanese yen versus the US dollar in a time where the US stock market did appear to start to stage a little bit of a recovery after we saw a major bottom in October. So the stock market started to see signs of a recovery, and at the same time the Japanese yen was gaining demand, gaining value over the US dollar. So as this started to happen, the US based assets were starting to appreciate in value. The Japanese yen had already appreciated in value against the US dollar, so there was like sort of an arbitrage incentive for you to sell physical Japanese yen in exchange for physical US dollars and buy US assets. And it could be stocks, and again, this could be in in other markets as well. But when the Japanese yen was appreciating against the dollar and the US stock market was starting to stage a rebound, there's incentive for you to short sell the Japanese yen. And as you can see, there were several opportunities. We have, several, we talk about support and resistance levels all the time in the server. We see lots of times where you've got areas where you've got like a support and resistance level that is, that is found, and it is, it's respected. So we've got these areas here. We've got, another area right here. This one's a little more important, as we saw a big rejection right here. And as we go back, we start to see areas where we've got significant areas of support and resistance where we're finding, levels where there are rejections. So there were several opportunities for traders of the Japanese yen to short sell Japanese yen in exchange for US dollars to be able to buy US assets. So what's happening here, as the value of their investments increase because the Japanese yen is losing dominance against the dollar, it's losing value against the dollar. They're making money on this trend, while at the same time, they're able to double up on that. And, during this entire time here, what's happening to the stock market? It's going up, and it's going up significantly. So they're making tons of money by being short on the Japanese yen, and they're also making tons of money being long on the US stock market. So then what ends up happening? When your primary position is to be short on the Japanese yen, so let's go back over here to the Japanese yen versus the US dollar. When your primary position is to be short, what you're going to be looking for, as a trader, you're going to be looking for some of these levels that we've identified as support and resistance to, basically to be nullified, right? To be broken, right? So we have, this level right here, which we fell, we rejected that, we come down, we break a significant support level, we go back and we retest that, and we fail that. We had a little bit of a push up here, but again, we saw a rejection. But then what ended up happening over the weekend, there's going to be a point where, traders turn into over-leveraged. So they end up being over-leveraged and potentially get to the point where they may start to see margin calls. And I believe that that is what ended up happening. And we started to see a bit of a short squeeze, and that's what caused the U.S. markets to drop, along with the global markets as well. Because fact of the matter is, all of these markets, they're very convoluted and they're all connected in one way, shape, or form. And so now we see the Japanese yen, really skyrocketing in value against the U.S. dollar, which is going to have a negative impact on, on U.S.-based assets as it's related to the Japanese yen. But at the end of the day, what ended up happening here, this was on Wednesday of last week. And really, you could see the signs here on July 11th. So before I start to talk about, Wednesday, Thursday, Friday last week, let's go ahead and talk a little bit about July 11th. So July 11th, this is when you saw a big move up. Now, this is a significant move up. It's only 1.6%, but that is a big move when you talk about Forex. 1.6% is a lot, okay? And that was on July 11th. So now let's take a look at the Japanese stock market on July 11th. So JP225 USD. I'm using the the CFD just so I can get more of a almost a 24-hour market. So on the 11th, that's right here. This is when we saw a sharp move up and a decline. So a lot of people talk about this as like a swing failure pattern, where you see the move up and then a rejection, and it doesn't find that support to then move up, right? So what ends up happening is, instead of doing that, we see that move up above resistance and then a rejection all the way back down to the mean. But then here on last Thursday, right? So we were just talking about Wednesday, Thursday, we saw a significant drop below what is or what should have been a significant support level, as it was, all the way back here in March of 2024, and then here in May of 2024 and June of 2024. Lots of support levels here, and it got broken, obviously, significantly. We went all the way back down, or at least the Japanese, the Japanese stock market went all the way back down here, which is a level that hadn't been seen since October of 2023. All right, now it doesn't pale in comparison to where the prices were in, October, January of 2023, October 2022, January 2023, but it was a significant drop. Now, as it relates to the U.S. stock market, again, looking at this July 11th, so going back here to the ES chart on the 11th, so let's see here. So July 11th, right here. So we saw a little bit of a drop. It wasn't a whole lot. We actually moved up and made some new highs, but this was also the markings of a pretty significant top on the U.S. stock market as well. Okay, so we've got this. We've got a significant top. We broke that resistance. We started this on Thursday, right? So Thursday, which is, August 1st, right? Going back and taking a look at Wednesday, July 31st, what day was that? So if you go back and take a look at older videos that I have done, you will know that when we were talking about this run up here, I was talking about getting short. I said that this was not going to be sustainable. Now, as I was mentioning before about economics, and could you have predicted that this was going to happen, or that this was the reason that it happened? When this all was happening right here, when we had, this, this drop here, correction, right? We were talking about a correction, and then this looked very corrective, and I said, this area you want to short, because more than likely what's going to happen is we're going to see a significant correction. Obviously, that is what happened. Now, I did not know at the time that it had anything to do with the Japanese yen. I didn't know it had anything to do with a short squeeze or anything like that. I was looking at it from a purely technical standpoint, and I just happened to, time the market just right. And now everybody's talking about the reason, right? So it's always easy to find the reason why afterwards, but it takes a lot for somebody to actually identify what is happening as it's happening and be able to take action on that. So we got really short when we saw this move up and almost got the exact top on that. If I go to SPX, which is what I commonly look at here, I mean, we can talk a lot about what I did here. And you can see the trade that I put in. You can see how far it went. And you can see my major area of resistance, my major area of interest was here between 5,200 and about 5,250. Obviously, we blew through that and went all the way down to 5,120. We had a significant move up and a little bit of a rebound. We'll have to see what today looks like. It's very possible that today is going to be, a decent day, but you really need to wait for that dust to settle. There's likely going to be lots of opportunities for there to be, quick money to be made, but we don't know yet the magnitude of what's going to happen with the yen versus the US dollar. Obviously, we're starting to see a little bit of a retreat here. That's likely going to continue for a while, but this right here is the reason why. Because people that were short in the Japanese yen, they were being squeezed out of their positions, meaning they're now losing money on this. It could be because of over leveraging. It could be because they continued to add to short positions as we started to reject some of these resistance levels. But now that we've broken a resistance level, you're going to start to see a squeeze happen here. Now, does that mean that the Japanese yen is going to continue appreciating against the US dollar, which would further drive stock prices lower? I mean, that's totally possible. I would continue to watch the US dollar index as well, which I'm not going to get into right now. But this is really what's more important, because we've identified that this is one of the main reasons why we saw that drop over the weekend and on Friday and on Thursday, right? We're starting to see that this is the reason why. So this is where you should probably focus a lot of your time and effort when you're looking at the market to make a determination whether or not this is going to continue or if it's done. And it's very, very possible that it is done, right? So, the other thing that we talk about on the Discord is, Fibonacci levels and whatnot. So I'm just going to take a look here. I actually haven't done this yet. I want to see if there's an important level that we are running into, and I'm going to throw a couple different fib levels on here from an internal retracement standpoint. We hit the 50. I don't think we've got to the 618 on this. Forex does tend to be, pretty technical, mostly because it is, speculative to a certain degree. Not as speculative as like gold and silver and crypto and all of that, but we did hit a technical level here. Now, does that mean that, Japanese yen is now going to drop? It really depends. This move up in Japanese yen was designed to target over-leveraged individuals. If you've been trading crypto for any amount of time, you know that kind of stuff happens all the time. There was $1 billion in Bitcoin or crypto-related liquidations, over the last week because of long squeezes, because Bitcoin dropped in value that people weren't expecting, and that squeezed people out of their positions. And when you squeeze enough people out of their positions, well, then you can start to see a recovery, because that's what the market is designed to do. They don't care about small retail traders. They care about the institutions and the big money because, if you've got big money and enough money to move markets like this, you don't care about the little people. You care about taking the money from the big people. And it just so happens that the little people get caught in that fight and get caught in that battle. So now that we've come here, I would wait to see what happens with the Japanese yen, with its significance in dominance versus the dollar, to make that hypothesis on what's going to happen to the stock market moving forward. If I take a look again, if I go back to the U.S. stock market, now that we've seen this, I had somebody mention on the server earlier, does this look like a wave 3 or does that look like a wave C, right? If you take a look at this and we go ahead and measure from the top to the bottom, we get this retrace, we went a significant amount, right? So we've moved, quite a ways. We went to the 1618. Now, what I will say is, from a correction standpoint, how far did we correct? Let's go ahead and measure that as well. We corrected about 10.5%, which that's a healthy correction. And everybody's talking about the end of the world. No, it's it's an election year. There's going to be some turbulence, and obviously we have some issues that we need to work through with with the election cycle and with debt, which I'm not going to get into debt. I could go on for a long time about that, but I do plan on cutting this here in just a moment. I think we've covered our bases. But is this a correction or is this the beginning of an impulse? I don't believe that this is the beginning of an impulse. I do think that that this was a nice and healthy correction. I do think it is possible that we see a dead cat bounce, right? We may come all the way back up here to this level. Now let's just talk about this for a moment, because if you're interested in the support and resistance levels that I was just talking about, this level right here is going to be super important. If we can get back up above this, I think the trend continues. In other words, if we see something like this move up here, reject there, that's fine. As long as we find support here, that's good. Then we can see the trend continue. Now, do I really want to see that? Not really. I want to see this take some time, but what I think is probably more likely to happen is we're going to see a move up here to see this this support level get treated as resistance, and then we start to see another move down, potentially down to here. Now, what's the significance of that? Well, that's going to be another support level. So that's going to be this level right here, and we'll go ahead and move this on over. Now, what does that line up with? Let's go ahead and just throw some targets on here so that we're all looking at the same thing, right? We've got resistance here, we've got support here, and support here. So these levels are important, and I think that it's very possible that we do see a move down here. Now, is it going to happen in mid-September? Is it going to happen at the end of August? That is really anybody's guess. But I do think that there is likelihood that we do come down here, and maybe it doesn't even get up here. Maybe it stops right here. Whatever that may be, I do think that it is possible that we do see a move down here. We could be in the beginning phases of a larger correction. And again, I mentioned last week why I thought we were going to see this drop. And again, we were getting short right here on this move after this big, large green day. In the days prior, I had talked about how in a bear market, most of the people that lose money are bears, and it's because of days like that on July 31st, where the S&P 500, or at least the futures, had a 1.56% appreciation, which is pretty significant, and that catches a lot of late short sellers, off guard. But then we had, the rejection and the follow through here. But, I think we had a pretty exaggerated move yesterday. I do think that the dust is starting to settle, but there's nothing to say that it's done. What I just mentioned, what I'd really like to see is I'd like to see, at least a little bit of time to get up here. But then I'd like to see a move up above and then a retest of this trend line before we start to see a continuation going into the end of the year. Was that the bottom? Maybe. There's no guarantees that it was. I do think that it is a buying opportunity, which we took some advantage of yesterday, over a number of different instruments. But if we see a rejection here, make sure that you still have some cash on hand, because we could see a move back down here to 5,000, at least on futures, which is probably going to relate to lower prices. Like we're talking about sub 5,000 on the S&P 500 index, and then we'll kind of go from there, one day at a time. If we get to this level, this is a pretty critical level. Again, we talked about the battle zone that we've already seen in the past. When we get down there, that should be a significant area of support. Let's go ahead and take a real quick look at the 200-day moving average, just to put things into perspective. Okay, back here at the lows, we were testing that 200-day moving average. Look how far away we are. There's going to be some mean reversion that's going to be happening, and that's what's occurring right now. We can't continue moving further and further and further away from this 200-day moving average. You're going to start to see a little bit of mean reversion, which is going to take us back closer to this, kind of equalize things a little bit. That would be healthy, right? It would be very healthy for us to see this correction. And honestly, I wouldn't mind seeing the S&P 500 going back down to 5,000. It's probably going to hurt some people. And, I see a lot of people talking about, the little guys that have the 401ks. They're the ones that are getting hurt the most. Guys, come on, you can't have that mentality. The average rate of return on the S&P 500 is like 9.5 to 10% over the last 10 years, right? You're going to have years where there's going to be some drawdown. But as we were talking yesterday, if you're under 30 years old, heck, even if you're less than 40 years old, this is nothing, right? What we've seen over the last week pales into comparison to what we saw in 2022. 2022, yeah, it took almost the entire year, but there was a 25% drop in the S&P 500. Well, guess what? If you were injecting capital as it was available to you into, index funds or whatever it may be, even stocks, right, you saw a 60% increase in value from the lows. And we've only dropped, 10%? And I've already seen people, freaking out about that. No. These are areas these are times when you can inject new capital. Everybody's talking about, well, I'm going to go ahead and inject that capital when we get a dip. When we get a significant dip, I'm going to go ahead and inject some more capital. Okay, so why are you not doing that now? Why are you complaining that, oh, now I'm losing all this money? If you're complaining that you lost a ton of money, you were over leveraged, and you weren't diversified, right? I've got funds that are in bonds that did tremendously well over the last few days. Stocks obviously didn't, but we closed out a ton of positions and we got short here. You could have gotten short in SPX like I did, right? When you're talking about trading with a lot of money, don't trade it in options, right? Although this would have been a fantastic trade if you traded options. Fact of the matter is, when you're trading with a lot of money, you don't want to go with 100x leverage. When you're trading with options, you're basically trading for 100 shares of XYZ stock. I'm not going to be trading a ton of money with 100x leverage. Yeah, you could get lucky. Yeah, that was a calculated move. Yeah, it paid off. But it equally could have not, right? That's why you set up a good trade. But with an options trade, even just like a 1% move, that could have had significant impacts on an options trade. So, we got into, a 3x leverage trade. It was, it was conservative, but it paid off really, really well. So just be careful, guys. That's really what I'm trying to say. I'm going to go ahead and end things right there. I talked about what I want to see the S&P 500 do, which is what's on the screen right now. I've talked about what I think it might do if the Japanese yen situation does not neutralize, equalize, and kind of level out. Wait for that dust to settle. But if we see the S&P 500 back down at 5,000, yeah, you should probably look at injecting a little more capital into the market, just taking those small bites. If you've got that long-term mentality, you're in a Roth IRA, or even 401k, if you're talking about shifting funds, um, take it, one day at a time. Be patient and have that long-term mentality when you're looking at the rate of returns over the last decade being an average of 9.5, 10% over the last 10 years annually. That's a really great rate of return when you're talking about compounding all of that. That adds up really, really fast. 10 years of 10% returns, go and do the math on that. I'm not going to do it for you, but that is a significant increase in value, and you could, if you wanted to, cash some of that out when you start to see something like this, and then now you've got that dry powder waiting for a rainy day, which we just happened to get immediately thereafter, and now we can talk about buying some stocks. We bought some stocks yesterday. We bought some index funds yesterday. We talked about gold and crypto and silver and all of that yesterday. So there's a lot of opportunities when you see a pullback like that, especially a 10% pullback. That's nothing to shake a stick at. That's 10% is significant. If we get to like 20% again, then that's your sign that you could be adding on to it. If we get that, I'll probably shift some bonds back into stock index funds, something like that. So, okay. That's all I've got for you. If this video helped you in any way, shape, or form, you know the deal. Like, subscribe, share. If you need access to our Discord, you can find all of that information on BitDoctor.org on how to get free access to our free chat room, or to get premium access, which I share all of my options trades, I share all of my equity trades, I share all of my crypto trades, all in real time. It's clear as day. But if you need access to all that, you can find all of the information on BitDoctor.org. And last but not least, wherever you are in the world, I hope you're having a good day, a good night, and a good evening. Take care, everyone.